The royal fortune, how the British monarchy makes and spends its money. Part 1, Crown, Cash, and Controversy. The British monarchy is one of the most famous and controversial institutions in the world. For centuries, it has been a symbol of tradition, power, and wealth. But in the modern era, where transparency and equality are demanded, the monarchy's finances have come under intense scrutiny. How does the royal family make its money? And how does it spend it? The answers are not simple. The royal finances are a tangled web of ancient traditions, modern deals, and taxpayer-funded support. Recent events, from Megxit to the death of Queen Elizabeth II and the coronation of King Charles III, have only intensified the debate. Is the monarchy a valuable national asset or an outdated burden on the public purse? Let's pull back the curtain on the royal fortune, starting with the biggest question of all: where does the money come from? The sovereign grant, taxpayer money, or national investment? Every year, the British government hands the monarchy a hefty sum of money known as the sovereign grant. In 2023, this amounted to £86 million. That's not pocket change. But where does this money come from? The sovereign grant is funded by the profits of the Crown Estate, a vast portfolio of land and property owned by the monarchy but managed independently. The Crown Estate includes prime London real estate, offshore wind farms, and even parts of the seabed. In recent years, it has generated billions in revenue, pound for £42 million in 2022 alone. Here's where things get controversial. The monarchy receives 25% of the Crown Estate's profits. Supporters argue that since the Crown Estate technically belongs to the monarch, the public is getting a bargain. The government keeps 75% of the profits. Critics, however, say this is a clever accounting trick. The Crown Estate hasn't been the private property of the monarch since the 18th century, and the royal family benefits from what is essentially a state subsidy. Then there's the question of spending. The sovereign grant pays for official royal duties, staff salaries, and palace upkeep. But some expenses raise eyebrows. Take the £369 million renovation of Buckingham Palace, funded by the grant. Supporters call it necessary maintenance of a historic building. Detractors see it as a luxury project at a time when ordinary Britons struggle with rising living costs. The privy purse, the royals' private income. Not all royal money comes from the public. The monarchy has private income, too, through the Duchy of Lancaster, a private estate owned by the reigning monarch. In 2023, it generated over £24 million for King Charles. The duchy includes commercial properties, farmland, and even a portfolio of stocks. Unlike the Crown Estate, this money goes directly into the monarch's pocket. It's used for private expenses, gifts, and supporting other royals who don't receive sovereign grant funds. But again, controversy looms. The Duchy of Lancaster enjoys special tax privileges. While the king voluntarily pays income tax, he is exempt from inheritance tax, a rule that saved the royal family millions when Queen Elizabeth passed away. Critics argue this is an unfair loophole, allowing the monarchy to amass wealth without the same obligations as ordinary citizens. The cost of being royal: security, scandals, and public perception. One of the biggest expenses for the monarchy isn't palaces or parties, it's security. Protecting the royal family costs taxpayers an estimated £100 million per year. This includes round-the-clock police protection, especially for high-profile members like the Prince and Princess of Wales. But security costs have sparked debates, particularly after Prince Harry and Meghan Markle stepped back as senior royals. The couple initially wanted to keep their security but fund it privately. The UK government refused, citing policy. Harry later sued for the right to pay for police protection himself, a case that highlighted the blurred lines between public duty and private life. Then there's the question of value for money. Polls show that while many Britons still support the monarchy, younger generations are less enthusiastic. The coronation of King Charles III in 2023 cost an estimated £100 million, with critics questioning whether such a lavish ceremony was appropriate during a cost-of-living crisis. A monarchy at a crossroads. The British monarchy sits at a crossroads. It relies on a mix of public funding and private wealth, balancing tradition with modern expectations. Recent events have forced it to confront difficult questions. How much should the public pay for royalty? Should the monarchy be more transparent about its finances? And in an age of inequality, is it right for one family to live in such opulence while others struggle? These questions don't have easy answers. But as the royal family navigates the reign of King Charles III, one thing is clear: the debate over the royal fortune is far from over. In the next part, we'll dive deeper into the monarchy's private wealth, exploring the vast estates, art collections, and hidden assets that make up the royal family's staggering net worth. Part 2: The hidden wealth, estates, art, and secret investments. If you think the sovereign grant and the Duchy of Lancaster are the full extent of the royal family's wealth, think again. Behind the gilded gates of Buckingham Palace and Windsor Castle lies a fortune so vast, so carefully managed, that much of it remains obscured from public view. This is the monarchy's private empire, a labyrinth of land, art, jewels, and investments that have been accumulated over centuries. Some of it is displayed proudly, like the crown jewels in the Tower of London. But much of it is tucked away, shielded from scrutiny. So, just how rich are the royals? And where does all this money come from? The crown jewels, priceless, or just pricey? Let's start with the most famous symbols of royal wealth, the crown jewels. Housed in the Tower of London, this collection includes the imperial state crown, the sovereign's scepter, and the legendary coin or diamond. Their value is incalculable, both historically and monetarily. But here's the catch: the crown jewels are not privately owned by the royal family. They belong to the crown, a legal entity separate from the monarch personally. This means they can't be sold, and they can't be taxed. Critics argue this is just another way the monarchy avoids accountability. If the jewels were privately owned, they'd be subject to inheritance tax, potentially worth billions. Instead, they pass seamlessly from one monarch to the next, untouched by the taxman. The Royal Art Collection, a private treasure trove. Then there's the Royal Collection, one of the largest and most valuable art collections in the world. It includes masterpieces by Rembrandt, Da Vinci, and Michelangelo, as well as rare furniture, sculptures, and historical artifacts. Officially, it's held in trust for the nation. But who really controls it? The answer is the reigning monarch. While the public can view parts of the collection in royal residences and museums, the royals decide how it's managed and who gets to profit from it. For example, the Royal Collection Trust, which oversees the collection, generates millions each year through ticket sales, merchandise, and exhibitions. That money funds palace upkeep and conservation, but it also reinforces the monarchy's financial independence. The question is, should this wealth be more tightly controlled by the state? Or is it right that the royals retain such influence over a collection that technically belongs to the nation? Sandringham and Balmoral, the royals' private playgrounds. While Buckingham Palace and Windsor Castle are funded by taxpayers, the royals also own private estates, most notably Sandringham and Balmoral. Sandringham, the Queen's favourite retreat, spans 20,000 acres of prime Norfolk countryside. Balmoral, the Scottish Highlands estate, covers 50,000 acres. Both were purchased privately by past monarchs and remain personal property. These estates generate income through farming, tourism, and even commercial ventures. But they also cost millions to maintain. And unlike ordinary landowners, the royals benefit from tax breaks. For example, Balmoral is registered as a business, allowing the king to claim exemptions on things like inheritance tax. Critics argue these estates are yet another example of royal privilege, luxury assets shielded from the financial burdens faced by ordinary citizens. The secret investments, offshore and out of sight. Perhaps the most controversial aspect of royal wealth is what we don't know. Leaks like the Paradise Papers have revealed that the Duchy of Lancaster, the king's private estate, invested millions in offshore funds, including some in the Cayman Island. While there's no evidence of illegality, the optics are terrible. At a time when tax avoidance is a hot-button issue, the idea that the monarchy might be stashing money offshore is deeply damaging. The palace insists these investments are standard practice for large estates. But the lack of transparency fuels suspicion. If the royals want to maintain public trust, should they be forced to disclose all their financial dealings? The cost of opulence, are the royals worth it? All this wealth begs the question, does the monarchy actually earn its keep? Supporters argue that the royals bring in far more than they cost. The Crown Estate's profits alone dwarf the sovereign grant. Tourism linked to the monarchy is estimated to generate over £1 billion annually. And the royal brand boosts British soft power abroad. But critics counter that these benefits are exaggerated. Many tourists visit historic sites regardless of the royals. And the idea that Britain needs a monarchy to be relevant in the modern world is increasingly challenged. Then there's the moral argument. In an age of food banks and homelessness, does any family deserve to live in such obscene luxury? A wealth of secrets, a future of scrutiny. The monarchy's wealth is not just about money, it's about power, influence, and perception. The more the public learns about royal finances, the more questions arise. Should the crown jewels be sold to fund public services? Should the royal collection be fully nationalized? Should the king pay the same taxes as everyone else? These aren't just financial questions. They're about what kind of country Britain wants to be. In Part 3, we'll examine how the monarchy spends its money, from lavish coronations to private jets, and whether the public is getting value for their millions. Part 3, spending the crown's coin, palaces, parties, and public backlash. If the monarchy's wealth is controversial, how they choose to spend it is even more explosive. Every year, millions of pounds flow into royal coffers, but where does it all go? From glittering state banquets to heated palace swimming pools, the royal spending habits have become a lightning rod for criticism in an era of austerity. This is the story of royal extravagance versus public expectation, and why every taxpayer-funded chandelier and helicopter trip sparks outrage. Buckingham Palace, the £369 million renovation. Let's start with the most expensive royal project in modern history, the decade-long refurbishment of Buckingham Palace. With an initial budget of £369 million, a figure that has likely ballooned since, this renovation includes rewiring ancient electrical systems, replacing crumbling plumbing, and removing asbestos. On paper, it's basic maintenance for a 775-room, 300-year-old building. But critics see it differently. Why should taxpayers foot the bill for a palace the king doesn't even use as his primary residence? At a time when NHS nurses use food banks, does a building with 78 bathrooms really deserve priority? The palace boasts a full-size cinema, indoor swimming pool, and post office, luxuries most Britons could never dream of. The monarchy argues that Buckingham Palace is a working building and national treasure. But the optics remain terrible, especially when King Charles continues to lobby for environmental causes while presiding over one of London's least energy-efficient buildings. The coronation controversy. King Charles III 2023 coronation provided the ultimate case study in royal spending under scrutiny. Estimated costs ranged from £50 to £100 million, including a 2,000-person guest list with global dignitaries. The 260-year-old gold state coach, so uncomfortable it's been called torture. Security for hundreds of VIPs. Meanwhile, Britain faced 14.4% inflation on basic food items. Strikes by nurses, teachers, and rail workers over pay. 120,000 children in temporary housing. The palace emphasized this was a scaled-back event compared to Elizabeth II's 1953 coronation. But to struggling families, it still looked like a tone-deaf spectacle. Royal travel, private jets versus climate advocacy. Perhaps no spending category highlights royal hypocrisy more sharply than travel. In 2022 alone, Prince William took a £15,000 helicopter flight for a 100-mile trip rather than a 2-hour train ride. King Charles used private jets for multiple European visits despite his COP26 climate pledges. The RAF spends £200,000 annually just to train royals to fly helicopters. The defence? Security concerns and packed schedules. But with William campaigning for Earthshot environmental prizes and Charles writing books on climate change, the disconnect is glaring. The staffing dilemma: 1,200 employees for one family. The monarchy employs a small army, from the Queen's personal dresser, Angela Kelly, on £150,000 per year to the Tower of London's Raven Master. Key figures: 491 full-time staff funded by the sovereign grant. 700 plus additional workers across royal estates. 24/7 teams for everything from corgi care to candle maintenance. While some jobs are clearly necessary, like communication staff, others raise eyebrows. A £30,000 per year clockmaker in ordinary to maintain palace clocks. Multiple chefs despite royals rarely hosting large events. A team of 10 fendersmiths to maintain palace fireplaces. The Diana effect: how a princess changed royal spending. Princess Diana famously called Buckingham Palace the world's fanciest prison, but her real legacy was exposing royal excess. After her death, public outrage forced the Queen to pay income tax for the first time. Heating bills at palaces were scrutinized. Windsor Castle spent £1.1 million annually. The monarchy began publishing annual financial reports. Yet 25 years later, many argue not enough has changed. When Prince Andrew settled his Virginia Giuffre lawsuit for a reported £12 million, no one explained where the money came from, highlighting the ongoing lack of transparency. The future? Can the monarchy downsize? Faced with growing criticism, the royals have made some concessions. King Charles III reportedly wants to slim down the monarchy. Some minor royals, like Princess Beatrice, now fund their own lifestyles. Solar panels were installed at Sandringham. But these are drops in a golden bucket. Fundamental questions remain. 1. Should the monarchy return properties like Balmoral to the state? 2. Could tourist revenue from palaces be redirected to public funds? 3. Is it time to end public funding for all but the monarch and direct heirs? As Britain faces its worst cost of living crisis in generations, the royal spending isn't just a financial issue, it's becoming an existential threat to their relevance. In Part 4, we'll examine the monarchy's financial future. Can it survive in the modern world, or is the royal money machine finally running out of time? Part 4, the future of the crown: reform, resistance, or revolution. As we conclude our examination of royal finances, we arrive at the most pressing question: can this ancient institution survive the financial scrutiny of the modern age? The monarchy stands at a critical juncture, facing challenges that threaten its very existence while simultaneously benefiting from centuries of accumulated advantage. The winds of change: a mounting pressure for reform. Recent years have seen unprecedented challenges to the monarchy's financial privileges. A 2023 YouGov poll revealed 62% of Britons believe the royal family should cover all their costs from private funds. The Not My King protests during Charles' coronation highlighted growing Republican sentiment. Commonwealth nations like Jamaica are accelerating plans to remove the British monarch as head of state. These developments coincide with Britain's worst cost of living crisis in generations, making the optics of royal wealth increasingly problematic. When nurses use food banks while the king enjoys a £1.5 billion inheritance, public tolerance wears thin. The slimmed-down monarchy: Charles' risky gambit. King Charles III has proposed a radical solution: a slimmed-down monarchy featuring only 7 working royals, down from 15 under Elizabeth II. Reduce ceremonial events. More value for money visibility. But this approach contains inherent contradictions. 1. Fewer working royals means more strain on senior members. 2. Reduced pomp may diminish the royal magic that justifies their position. 3. The core financial structure remains unchanged. The tax question: Britain's royal loophole. Perhaps the most contentious issue remains taxation. While Charles voluntarily pays income tax, the rate remains secret. The monarchy remains exempt from inheritance tax, saving an estimated £600 million on Elizabeth's estate. The Duchy of Lancaster's offshore investments continue despite public outcry. Reformers argue that subjecting the royals to normal tax rules could generate £300+ million annually for public coffers, improve perceptions of fairness, modernize the institution. But traditionalists counter that such moves would fundamentally alter the nature of the monarchy. The Commonwealth cash crisis. The financial implications of losing Commonwealth realms are stark. Each departing nation could take portions of the Crown estate. The royal brand's global value would diminish. The sovereign grant might need to be renegotiated. Barbados' 2021 transition to a republic served as a warning shot. With at least 6 more nations considering similar moves, the financial impact could be severe. 3 possible futures. 1. The status quo, unlikely. Public tolerates current funding model. Commonwealth remains intact. Scandals are contained. 2. The reformed monarchy, probable. Sovereign grant reduced by 40 to 50%. More financial transparency. Some private wealth used to offset public costs. 3. The British Republic, possible. Monarchy abolished via referendum. Crown assets nationalized. Historic palaces become museums. The verdict, evolution or extinction. The monarchy's survival likely depends on willingness to embrace true financial transparency, acceptance of reduced public funding, ability to demonstrate tangible value to modern Britain. As Britain grapples with inequality, climate change and economic stagnation, the royal family must prove it's part of the solution rather than a relic of the problem. The coming decade will determine whether this 1,000-year-old institution can adapt, or if it will become history itself.